Can't send the cards out, can you?
I don't know what to do with them. They're just going to sit on my desk until Canada Post stops striking. So yeah, you're looking pretty festive there, Justin.
What gives you that impression?
I'm just worried. Are
So
you plugged into a wall outlet, or is that battery powered?
my range is only like 6 feet, right? That's right. No.
Yeah, sitting at that
and
desk.
and and I no did the safety checks and everything, made sure everything was appropriate. Um, it is the middle of the month of December. I think a lot of people are starting to certainly now look towards the end of the year. It is the holiday season, a variety of different holidays and celebrations. It's the end of the year. Thoughts of sugar plums and gingerbread houses and vacations and things of that nature are coming up. So, how about
Mm-hmm.
yourself?
I'm loving the snow that we're getting and looking forward to skiing. I haven't
Yeah.
yet. Before I had a chance, I think it got warm for a day and then cold and warm again. Um, yeah, eventually I'll get out there. I'm planning to head down to Calgary in a couple of weeks. I guess when this comes out, it'll be that week when it comes out.
Mm-hmm.
So yeah, actually, while if I publish this on the date I plan to, then I will be hopefully skiing that day at Sunshine or Lake Louise. We'll see.
So, at a high level, I think a few things to kind of talk about, and it's not a comprehensive list, but I just want to generate a few thoughts because it is December, and to say that if you haven't already thought about it, or you haven't already had the conversation, or just kind of be prepared or ask your advisor and planner to think about to have that conversation before really the holidays and the time off really starts kicking in, right?
Mm-hmm.
So tax loss selling is one thing, and you can't tax loss in a registered account, right? Let's make sure that we establish that it's only in a non-registered account. But tax loss selling is a sort of a phenomenon and an event that does occur. I don't know how much you do of it, but there are some efficiencies to be had about, you know,
Yeah.
and we won't talk about the superficial losses and all that. Have that conversation with your advisor or with Marcus and I, right? But yes,
Mm-hmm.
there are some rules around it, specifics. But it is one thing that people do talk about at the end of the year.
Yeah, so what I do with my clients, those who have a significant amount of taxable investments, and a lot of clients, all
Mm-hmm.
they have is RSPs and TFSAs, and that's great. You're not having to worry that much about taxes then. But if you have a fair amount in a stock portfolio or whatever, what I do is try to find out just to give them an idea what their tax situation is going to be in the new year. And if they have a stock portfolio, maybe there was some turnover in that stock portfolio during the year, and they have realized a capital gain. And then if we want to look at maybe offsetting some of that, or maybe they had a mutual fund that had a capital gain within it and that got spit out, or it's going to get spit out as a
Distribution. Yep.
distribution. I can tell you a couple of popular funds in Canada. They did well on owning NVIDIA this year. And there might be other funds like that. Any tech fund that maybe bought NVIDIA and sold it during the year at a high, they might have a big capital gain that they're going to spit out to you, the shareholder, the unit holder of the fund. And you might want to look at your funds that you hold and see, do I own that fund or do I own an active fund that might have owned NVIDIA or some other high-tech
Mm-hmm.
stocks? Maybe I should look to see what the distributions will be for that fund. And maybe you'll find out it's like a 10, 15% distribution. Could be a big amount. If it's $100,000 in the fund and you get a $15,000 capital gain spit out at you, maybe there's an opportunity to do some tax loss harvesting elsewhere to offset that. And that's where you might want to look at maybe there's a stock that is down, you can sell it. The rule you were talking about there, it's a special tax rule to keep people from taking advantage of this. You can't just sell a stock and buy it right back and then call that a capital loss. You have to be out of it for more than 30 days. And that is, you
Mm-hmm.
have to be out of it for more than 30 days in any of your accounts. I
Mm-hmm.
think even between spouses.
Yep.
Um,
That's right.
so Yeah, so what we actually can do on our portfolio, on our platform, sort of manage stock portfolios. We can tell the platform, like we're speaking to it, it's not AI, but we can tell the platform to tax loss harvest a certain dollar amount or as much as possible. It will pick which stocks are down, it will sell them, and it will automatically keep the portfolio manager from putting the money back into those stocks for more than 30 days.
Mm-hmm.
And that way we can sort of capture that loss.
Yeah, one additional point I'll add is with the mutual funds as well, is that sometimes that capital gain or any sort of distribution that occurs at the end of the year as they clear their books goes to the unit holder of record. And it may end up, and there's certainly cases where you may have purchased or invested into a
Hmm.
fund, say in November, just a month ago, and all of a sudden, because you are a unit holder on the day of record, you're getting
Yeah.
that full
Yeah.
year's worth of taxation, whereas you've only owned it for maybe weeks. And so, timing of those, if you owned it for most of the year or all the year, then it's, it is what it is, right? But you may
Hmm.
want to be a little bit potentially tactical about some of the purchases you make leading up to that specific day of record. And that day of record is different for every fund. I certainly actually held off on purchasing, reinvesting in some additional of a particular fund because the day of record is actually within 2 weeks. So I figured I might as well wait
Hmm.
until afterwards. TFSA withdrawals. In case you may need some funds at the beginning of 2025. And it's not a bad idea to consider your cash flow, especially with the bills over the holidays, as they tend to be a little bit higher than normal, than the other parts of the year,
Hmm.
is that it may not be a bad idea to take some money out in December because come January, you can contribute that money right back into the TFSA. But if you withdraw the funds in January, you can't actually recontribute or put that money back in until January 2026. So again, it's
Right.
more of a timing thing. And if you anticipate some higher expenses or some withdrawal
Hmm.
requirements
Hmm.
in the early part of the year, it is something to take into consideration.
So
Any
you're
thoughts on that?
suggesting that to give yourself some optionality, which is good. So
Yeah.
if you need to pay those holiday expenses off, great. I actually read a ridiculous article this week. I won't name the newspaper. It was one of the major newspapers, but
Okay.
there were some advisors that were interviewed in it, and
Yeah.
I think two of them, they both recommended what did they call it? A TFSA gain crystallization or something like that. Basically, what they were recommending is if you have money in a TFSA that has grown, withdraw your gain, and then
Okay.
that gain gets added to your TFSA contribution limit the next year. And
Mm-hmm.
I forget the term. The ridiculous thing. I mean, you're already shaking your
Yeah.
head, right? It's like if you left the money in the TFSA, it'd all be the same. You would still
Yeah.
have more money in a TFSA. You're not gaining anything in terms of contribution space. So, I mean, here's the example. Let's say you had $5,000 at the beginning of the year. It grows to 7,000. You withdraw the $2,000 extra, and then next year, when you get $7,000 of new contribution space, now you have $9,000 of contribution space. But if you just
Wow.
left it in there, it would make a
Yeah.
difference. Again,
It
the
wouldn't. Yeah.
article. I mean, if anyone wants to read the article, I will feature it in my bad advice section. No, I'm not going to share it openly, but
Okay.
on my
Okay.
newsletter, it'll be in the bad advice section upcoming.
Okay.
Just subscribe. On my website.
RESPs, or I would say that it's a calendar year an account as well. So contributions, particularly if you're looking to catch up
Yep.
on past contribution or a contribution space, I should say, and the grant, the CESG grant, then that's
Hmm.
something to take consideration is to do that contribution before the end of the year, so that in the new year you can then catch up on another year's worth of contribution. So again,
Yep.
mechanics and the CSG, whenever it comes, even if it comes in January, it's attributable to 2024. And again, mechanics of it to talk to your advisor. But again, if you have many years of catch up to do, then
Hmm.
again, something worth considering in the next coming weeks.
Yeah, important for parents who start contributing late but have a lot that they want to contribute to the RESP. So they
Yep.
will usually do double contributions each year, $5,000 each year, getting $1,000 of grant per beneficiary.
Mm-hmm.
Some has multiple kids, so they put
Yeah.
$10,000 in, you get two
A lot
thousand
of
dollars of grant.
contributions.
But that
Yep.
yeah, that $1,000 grant per beneficiary is the limit that gets paid out. So you just need to remember RESPs go by calendar year. You don't get the extra 60 days like with an RSP.
Yeah. Yeah. Um, Black Friday in the United States, Cyber Monday. There's also now a
What did you
concept
buy?
today. What did I buy? Actually, I was looking, and
Yeah.
I didn't buy anything. But certain members of my family looked around for some to fulfill some wish lists and some
Mm-hmm.
Christmas gift lists. But which makes me talk about gifts and gifting. So there's like
Mm-hmm.
Giving Tuesdays as
Yeah.
well. Yeah, in the grand scheme of things, donations, whether they're charitable contributions, whether they're in kind, potentially maybe you have some unrealized capital gains, rather than give some of it to the tax man and to give more to the charity nonprofit of your choice, having that contribution done and to maximize those great tax write-offs. That's also something you'd want to do. And again, cash only, or maybe mutual funds, securities or individual stocks, potentially through a donor advised fund. That's usually that's a very popular vehicle these days. I have one
Mm-hmm.
myself, and I have other
You
clients,
do really.
and I do. And talking around, I've actually had to have a few
Mm-hmm.
conversations with people in the office who want to open one up for their own clients, and they've come to me to ask about my own experience
Mm-hmm.
about it. What are the mechanics again? Which organization do you use, and how do you actually do this sort of thing, right? And so, yes, I do have a donor advised fund. I had some gains that I wanted to contribute
Mm-hmm.
to, and be have a little in one particular calendar year, and then I had to still have the control as to the timing of when I wanted to actually do the final contribution to the end beneficiary, a beneficial organization, right?
So
So
you're putting all of your Constellation stock in there, right? Which has such a big capital gain on it.
over
But I
time,
mean,
over time.
and yeah, getting to your point, Justin, I assume the situation is, you have your cause that you want to contribute money to, X amount of money to. You can
Mm-hmm.
take X dollars out of your bank account and contribute that and get a really nice tax receipt. I made a point about it in a recent Twitter thread, how in
Mm-hmm.
Alberta we have the best charitable tax credits because the government a few years ago or last year increased it to be equivalent for the first $200 to making a political contribution, which is a 75% tax credit when you combine provincial and federal.
Mm.
So again, that's just Alberta. Sorry, everybody else. But in Alberta, the first $200 that any of us contribute, if you've got a spouse that's lower income or kids that are adults and paying taxes, tell them contribute $200. You're going to get $150 subtracted from what you owe in taxes once you file your taxes.
Mm-hmm.
So really, after that, it's 50 to 54% for Albertans for the excess of $200. So getting back to what you probably were doing is instead of taking the money out of your bank account and getting that tax credit, you had your Constellation shares, which I'm sure had a 90% gain or more capital gain, right? You could have sold those Constellation shares and had to pay capital gains tax on that, and then taken that money and donated it, and that would not be very efficient. But instead, you took the shares and donated them, I'm sure not all of them, but some of them, directly to charity into your donor advised fund, which is part of a charitable trust. So basically,
Mm-hmm.
you don't own that account anymore. That's money's gone; it belongs to the charity, but you can manage it for them, sort of. Um, you donated those shares into there, and you got your tax receipt for that amount, and the government exempted you completely from the capital gains tax, which is a fantastic thing that I think Canada is one of the only countries that has such a good deal. The US,
Mm-hmm.
it's a little bit like that, but not quite as fortuitous. But yeah.
And then also the end organization, the benefit of your choice, the organ, yeah, gets a much,
They
they
get
get
the
more,
money.
they get more,
Yep.
right? So it is so
Well, you can
again,
grow that money in you can grow the money in your donor advised fund. You invest it, grow it, and then you
you
can give
could
more money to the.
you could do that as well. And that is one option as well, right? And you control the timing of when you do that
Mhm.
final contribute or the charitable donation. And so yes, whether it's religious organization, a church, a synagogue, a temple, something of that nature, Rotary for yourself. There's some cancer societies that I'm involved that donate to UNICEF.
Mhm.
Special Olympics or organizations like
Yeah.
organizations like that. Even my kids' school, even part of the playground. I donated some funds that way to help get that thing being built. This past year has been, in terms of the financial markets, it's been quite good.
Mhm.
To say the least, irrespective of what sort of allocations you've had, they've all been positive, I would have to say. So why not share in some of that to
Yeah.
those who
And
aren't able to or didn't have the opportunity to benefit from those trends?
And one other thing you prove, and I know you've been very successful with those Constellation shares, but I don't think you've got $1 million donor advised fund. You can start them pretty small. You can probably start them with, and I know
$1,000,
one you can
like,
potentially, yeah. I mean,
yeah,
Edmonton Community Foundation, they start very small here. I don't know if
yeah,
that's if you have yours at Calgary Community Foundation, but there's also a provider we go through with our clients called Charitable Impact. And I
charitable
think
impact,
they're
yeah.
like a $15,000 or $25,000 minimums. It's not huge.
It varies, but yeah. But then once you start donating, that number drops down, right? And so in the end, it's like,
Yeah, yeah.
if everybody did $1,000, $5,000, it's just a starting point, right? And
Yep.
it just helps in the causes or in the behavior, again, talking about behavior that you already are doing, just make it more tax
Mm-hmm.
efficient for yourself and more dollars to the end charity, right?
Mm-hmm.
So if you haven't had that conversation, bring it up, and if not for this year, keep it in mind because they are becoming a little bit more popular, and it is another way in terms of the holistic financial planning, in terms of estate planning, philanthropic intentions. Right, it's something to certainly keep in mind,
Mm-hmm.
if not now, but for the future. You know, one other one other thing I'd say as well is just kind of like, yeah, it's the end of the year, so rebalance.
Yeah, I mean, rebalancing. I mean, the very basics. We could do a whole episode on why to rebalance, but the very basics
Yeah.
are if you had an asset allocation of 60-40, 60% stock, 40% bonds at the beginning of this year, you're probably with stocks up, are they up now 30% for the year almost?
Depends.
You,
Depends on
the
what you got. But
60
let's
could
just
have
call
grown
it, yeah,
by,
let's say it's gone
yeah,
up to
like
65-35, right?
it could be at 78. Like
Yeah.
if the
Yeah.
60 grew by 30, it's at
Yeah.
78, and
Mm-hmm.
now you're exposed to more risks. So eventually the markets will crash again. That is a guarantee. At some point in the future, the markets will crash. I can guarantee it.
Yeah.
I don't know what
Yeah.
the markets will do in 2025, but crash is one of the things that could do. And if you're
We're
now
not doing
exposed
predictions.
to,
That's the
are we?
next episode.
Do we have time for that? If you're now exposed about 80% to stocks instead
Yeah.
of 60, like if you were exposed to 60% stocks on the way up and you're exposed to 80% stocks on the way down, that's not a fun ride. So
Yeah.
that's why we rebalance. And unfortunately,
Mm-hmm.
you might cause some tax issues with that, but you kind of have to sometimes do what's right from an investment strategy perspective, regardless of what the tax consequence is. So
Mm-hmm.
don't hold on to those NVIDIA shares
Yeah.
forever. You might have to reduce your allocation so you're not super concentrated in them, right?
The vast majority of folks have most of their financial assets within a registered plan, so the tax
Yeah, that
implications
doesn't
are,
matter.
are
Yeah.
nil, right? They're de
Yeah.
minimis. So it is, there's no friction in that sense in order to doing that, right? So.
Mm-hmm.
So yeah, there's those are just a few things that come off the top of my head.
Yeah.
Again, have a conversation, right? And again,
Mm-hmm.
everyone's a little, everyone's unique in their situation, but just a few pointers to spur some conversations over some Christmas cheer, perhaps, or beforehand, and then be prepared for 2025. So
Mm-hmm.
yeah, hard to believe it's already December 20. Well, yeah. Nevertheless, no single day, or week goes without news, and a few things I would say that's particularly come up post U.S. election, especially in Canada. I imagine Mexico is dealing with the same sort of situation, but tariffs is something that's particularly come up in mind, or
Mm-hmm.
in all the thought pieces as of late. There's a lot of scenario building just in case. Is energy included? Is energy excluded? Is it 10%? Is it 25%? What is it going to look like? What are the implications? Do you go more US, right? It's all interesting conversation. At this point in time, you could be throwing a dart against the wall, and you don't
Mm-hmm.
know. We don't know, right? But it's just indicative of more uncertainty over the next 4-year term. And who knows, maybe in 2 years for the US midterms, right? But we also have an election coming up. I don't want to chat too much politically, but it's just, I think this is going to be sort of standard for the next 4 years, but
The
I have faith in
challenging
the
thing
markets.
with politics, geopolitics, and all that
Yeah.
is they're a route to an end goal, basically. And when we talk about tariffs, yes, the
Mm-hmm.
announcement, which scares the market sometimes. I mean, these markets, they don't seem to care really, but sometimes they can scare the markets. The announcement is, oh my God, 25% tariffs on all goods from Canada and Mexico to the US. The end goal, obviously, is it's a negotiation tactic, and we know exactly. And Trump was very vocal on what he wants to negotiate on, but it doesn't mean we need to all panic that there's going to be 25% tariffs. If they actually implemented that, it would actually do more damage to the U.S. economy than to ours. We have goods that they will need, and one of the things that Trump wants to do in his next term is reduce the cost of fuel. And how do you do that? By slapping 25% on oil from Canada, the 4 million barrels a day or so that
Mm-hmm.
the U.S.
Yeah.
gets from us.
Yeah. Yeah.
So, yeah, it's just sometimes you have to mute that stuff too and think more about your investment strategy, think more about rebalancing your portfolio and taxes. Think less about what is going on in the news.
I think on a similar sort of vein is that you mentioned, just a few moments ago that at some point down the road, we've had such a good run this year. Over multiple years, we look back at the crash or the pandemic-induced
Mm-hmm.
crash that happened a few years ago. We know we agree upon the fact that there will be other corrections and bear markets, right? We just don't know the timing of it. And I think one of the more appropriate or certainly implementable, if I can use that term, make up right, is to not think about options of selling everything and waiting, or buying all these hedges and worrying about the doomsday scenario or a recession sort of scenario, but it's just kind of mentally building that fortitude and recognizing the fact that stuff's going to happen at some point. We don't know. There was
Mm-hmm.
I don't know, you call it a coup d'etat, but there was martial law that was
I
declared
read that this
in
morning.
Korea
I
yesterday,
was going to
right?
ask you about it. I
It
assume
was
you
a
know
few
all about it.
hours, but that came out of left field,
Yeah,
right?
yeah, yeah.
There's one company that I follow, and I have some clients in it, and the CEO was just, the CEO of this company, and it's a founder-led company, was just nominated to be the head of NASA. So he's going to leave the company, right, and step away from his role as CEO to go lead NASA. And so that's left field, right? Like, these are things that you just
Mm-hmm.
can't, hard to plan for, but you can plan for. And so, yeah, that company, I think, is down double digits today, 10% or something, just based off of that news feed, right? But what you
I was
can
just
do
checking
is,
the Korea ETF. It's up
oh yeah,
0.7% today, so they didn't
well,
care.
you you giveth and you taketh away, right?
Mm-hmm.
But or the reverse. And the idea there is that just like mentally learn, build that again, that those calluses, the thicker skin, understand that they will happen. And so rather than mechanically trying to build all these layers of protection, you and I are not hedge funds. We might look at hedge funds, but we don't, we're not hedge funds ourselves. People don't operate their lives necessarily as a real hedge fund does, right? And so, but the easiest thing to implement is just building that mental resolve, that intestinal fortitude, as they say. Remember, like, it's going to happen. Just know that it's going to happen at some point, and
Mm-hmm.
accept it, and build some resiliency within yourself to kind of go through it when it does happen, right? So anyway, pausing off
If
of
you're
that, right?
investing in stocks, you pretty much have to expect that whatever you invest is going to go down 20% next month.
There's always a drawdown.
Yeah.
Always a drawdown.
And if that makes you sick to the stomach, that you could potentially,
Yeah.
let's say you came into this money and you're so excited, you're going up to me or Justin and you want to invest it,
Mm-hmm.
it could be down 20% in a month or two.
Mm-hmm.
You just
Yeah.
have to accept that reality. And I
Yep.
will tell you that and if you can't take that, then you need to look at something else, something less risky.
Yep. Yep.
You were talking about throwing darts at a dartboard earlier. And I know last year we talked about S&P predictions for the year. And we hear those
Yes.
every year. And now
Yes.
the talking heads are back on TV talking about what they expect the S&P will do in
Yep.
2025. Here's some numbers from last year.
Okay. So first of all, let's set the stage. The S&P right now, as of today, is just a shade over 6,000. It's about 6,060 or something, if I remember correctly. Just call it 6,000.
It's approaching 6,100.
6,100, yeah. So now that we've established at least a comparable, 12 months ago,
The
remind us.
average,
Yeah.
the average of all these really smart people, strategists and what do they call them, analysts and all that stuff,
Econ.
the average was 4861 in terms of predictions.
4861.
The very highest one, the most bullish one, the Perma Bull, Tom Lee of FundStrat.
Tom Lee, yeah.
He either gets ridiculed for being too bullish, or they're celebrating him. And
Yeah.
he had a
Brian
prediction
Dusky. Brian Dusky
5,200.
from BMO, he's also he's up there too. But
Yep.
nevertheless, carry on.
So he predicted 5,200.
52.
And we're
And
900 higher than that almost.
Yeah.
He's revised his upwards. And the thing I mentioned last year when we talked about this, it always is simply a snapshot of what the sentiment is at the time those numbers are given. Last year, still a little bit weaker sentiment. I think everyone expected a gain. They just did not expect as big of a gain.
Yeah.
Now they're probably going to predict something. I mean, they're already coming out with these predictions, 6,500, 7,000, whatever. Probably we're going to have a weak year next year because it's completely unpredictable. Who knows what Trump's going to do? It's going to be a really volatile year probably. But 2017 actually was the least volatile year in the markets, almost one of the least volatile years. So who knows?
Mm-hmm.
Totally unpredictable. It's all fun, our guy Tony Dwyer, he's since retired from the position. He used to
Mm-hmm.
do these predictions
Yeah.
as well, and he was very good at them. He was once the Tom Lee before Tom Lee, and was
Mm-hmm.
considered the biggest bull on Wall
Mm-hmm.
Street. But yeah, sometimes it's really just clickbait, or it's just to sell the article, and it's not something to base your strategy on. I actually remember, and I probably mentioned this last year, when I was a brand new financial planner with the bank back in 2008. I think I had a client. So 2008, I had a client asking me, "What do you expect? What do I expect the S&P to finish the year at?" As if this is some kind of smart
Yeah.
intuition I should have,
Mm-hmm. Yeah.
insight on
Crystal
things, and we're
ball.
not basing our strategy on this, right?
Uh-huh.
So in early 2008, yeah, like 1,500. I don't know. It ended up being like 1,000, but whatever. um,
Financial crisis, you know.
I
What
mean,
are they
really,
come
where I helped this client out was the fact, he panicked in early 2009 and didn't want to contribute money to the RSP, or didn't want to invest the
from?
money
Mm-hmm.
in his RSP. Actually,
Mm-hmm.
wanted to sell everything, and I
Mm-hmm.
talked him out of it. And that is what we advisors do. That saved that guy a lot, because he did not sell when the S&P was less than 1,000, or when the TSX was less than 10,000.
Mm-hmm.
And he did continue with his strategy, the strategy we put in place just a year earlier, and ended up doing very well in that time since then, because we know the
Mm-hmm.
markets are up sixfold now since that. So I was going to say too, if we think about that 6,100 number, what was the S&P at right before the pandemic, when it was at an all-time high? By the way, it was at an all-time high in
Yeah.
January of 2020.
2020.
It was at low 3,000s. So we've nearly doubled that since then. Now, maybe that's telling us the markets are overvalued today. I don't know.
Mm-hmm.
But you could have had the worst luck and bought right before the markets plummeted 35%.
Yes.
And you probably would have been panicking and very upset at that decision. Or if I, the advisor, recommended it, you were upset with me.
Yeah.
But you did really well in that time period. Now, most people weren't invested 100% in U.S. stocks. So if your portfolio did not go up by double since then, it's because you probably are diversified. But it's just that's an extreme case of volatility.
Yeah.
That's
Yeah.
how things can be.
Yeah, and it's a great, like, think of what happened over those 4 years, right? Getting on 5 years, right?
Yeah.
And it's just, um, it's something like that will happen again. We just don't know when.
Mm-hmm.
All right, so yeah, timeless lesson to have as a whole. So, any other interesting little market news that's come out for you? Have you observed over the last couple days, few weeks?
No, you know me. I'm the index ETFs are not interesting.
Yeah, no, that's not a bad thing. Like
We
the Muse Contrarian Index with the crypto is
Yeah, because I
hitting it out of the
remember
ballpark, but
I got completely out of it when it really
yeah,
started to pick up, right? And
yeah,
that worked out really well. There was another small micro cap, and
yeah.
I've always had a few micro cap stocks hanging around in my TFSA from years back, and just in a way, I'm kind of a bit too anchored to them, I guess, or just
Of
that
course,
loss aversion. I don't want to
of
sell them
course,
at a
yeah.
loss. So one of them finally got to a slight gain position, so I just pulled the trigger and sold it,
Mm-hmm.
and I think it's tripled since then.
You're
But yeah,
definitely gonna make, like, you're making Kramer give a run for his money, right?
there was a friend of mine who recommended the stock to me back
Yeah,
whatever,
yeah.
and oh yeah, I sold it at 11 cents. It's at 36 cents now.
Woo! Penny stock, real
Um,
penny stock.
yeah,
Wow.
and the guy who
I
recommended
don't
it
do
to
that.
me, I
Wow.
apologized to him because it
Mm-hmm.
went down right after I bought it, and I said, "I'm so sorry." Um, and
Yeah.
it's safe now. I'm out of
Uh-huh.
it now that it's tripled. And I know there's another one. Actually, I did have a little bit of exposure to a company that's involved in cryptocurrency. I won't name the company, but so I had the crypto ETF. I guess last year was when I sold it, and then everything
Mm-hmm.
went up. But then I held on to this company that is involved in sort of the banking of crypto in a way.
Mm-hmm.
And yeah, I sold it at a bit of a gain too, 20 something dollars, and it keeps moving up. It's at 28 bucks now. So that's why I don't invest in stocks. Which if people think I'm a stockbroker, I'm an investment manager or an investment advisor, right? So a portfolio manager.
Mm-hmm.
I don't like trading stocks. It's like playing the horses.
I will say on that point, at least with the crypto side, unlike a couple of years ago when it was really kind of hitting the zeitgeist of the general population,
Mhm.
I think I've had this year maybe three inbound queries, maybe four, about crypto Bitcoin in general, and three out of the four probably occurred in the last month. But yeah, it's interesting.
Okay,
Yeah, excellent.
should we call it there?
We'll call it there. Have a wonderful holidays, Marcus, with you and the family and those around you and friends. Yeah, give a little bit more, everybody.
You too.
It's been a good year for everyone, and yeah, feel free to reach out and have those conversations. If you're not having with your existing advisor, we're both open to having those conversations with you.
And as always, drive safe, enjoy those Christmas parties, but stay safe.
All right.